Welcome back. And in our top business story, the UAE's anti-corruption outlet, the State Audit Institution, has started recovering over $1 billion dirhams from illegal financial flows that took place in 2010. According to a local paper, the illegal transactions include the misappropriation of public funds, forgery, fraud and bribery cases. Dr. Harib Saeed Al-Amimi, president of the institution, stated that 10 graft cases have been reported to public prosecutors over the past 2 years, amounting to hundreds of millions of dirhams. Despite this, the UAE remains investment-friendly, having been ranked 28th among 183 countries in the annual Corruption Perceptions Index, just behind Qatar in 22nd position, and is the second least corrupt country in the GCC. The move of recovering illegally paid funds by the SAI follows the government's commitment to raise standards of accountability and transparency. Dr. Al-Amimi stated that individuals are able to report fraudulent behaviour on the SAI website. Mergers and acquisitions in the Middle East rose 4% in 2011, up from 401 in 2010 to 416 last year. For the fourth quarter of 2011, total deal values rose 64% from $4.4 billion in Q3 to $7.2 billion. As for the first half of the year, average value M&A deals rose to $10 billion, while the H2 saw an average value of around $6 billion. The UAE topped the list of both inbound and outbound domestic transactions, accounting for around 54% of total announced deals last year, with outbound transactions standing at $16.3 billion. Industrial products and real estate saw the most M&A activity last year, worth $680 million and $3.6 billion respectively. Telecom operator Du has announced that the company has been informed that the royalty payable to the UAE federal government for 2011 will be payable at 15% of the company's net profit and an additional 5% of yearly revenue. The statement to the Dubai financial market, published on the DFM website, added that the ongoing royalty for 2012 onwards will be advised to the company in due course. So with that, let's now take a look at the stock indices across the GCC. And looking to international markets, the US dollar closed this week on a mixed note, following a rather impressive number. Yet markets are trending a little lower to kick off the week, with the dollar gaining. So to explain what we're seeing here, we earlier spoke with Gaurav Kashyap, the head of the DGCX trading at Alpari Middle East DMCC.
Well, Laura, we've seen the US dollar rally to kickstart this Monday morning's trading session for a couple of different reasons. First and foremost, we had the all-important US jobs number coming out on Friday, and the jobs number was stellar to say the least. We saw that 243,000 new non-farm jobs were added in the US economy during the month of January, this well above expectations of 150,000 new jobs. We did see a lot of robust hiring in manufacturing, and private payroll numbers also came in at a stellar number of 257,000 jobs for the month of January. The overall unemployment rate dropped from 8.5% to 8.3%. Now, despite the movements of the market, we saw the US dollar actually strengthening following the news because of the fact that the US non-farm payroll number allows the Fed to be a little bit more flexible with introducing quantitative easing measures. Generally, what happens is with the US jobs growth back on track and the US economy recovering slowly but surely, the Fed will not be forced into introducing QE3 measures, which is the biggest basis of dollar weakness. So as a result of putting the QE3 on the back burner, we're seeing the US dollar strengthen. Further, along with the unwinding of QE3 measures, we did see a breakdown of talks with regards to the Greek bailout. The coalition government is unable to agree to deeper austerity measures, which has thrown the whole discussions into a bit of a chaos. So we'll continue to watch those stories. As well as the favorite probably currency that we're going to be watching this week is going to be the Australian dollar. We have the interest rate decision by the RBA coming out on Tuesday morning. They're expected to cut it by a quarter basis point to 4.0%, which should see a lot of pressure in the Australian currency against the other majors. And we're also going to be watching for Thursday's Chinese CPI reading, which is expected to slow. Remember, China and Australia are very strong trading partners, so negative data out of China will have a direct impact on the Australian pairs. We're probably going to look for a test of around 1.06 on the Australian US dollar across this week.